Good afternoon, everyone. My name is Stephanie Shea, Vice President at M&T Bank, and also the Board Chairwoman of Asian American Chamber of Commerce. Today, we're very happy that one of our board members, Kishan Alexander, and his partner, Brandon, like to present this new insurance product to us. I'm also learning, really want to hear about this new product to help my clients as well. And thank to Kishan and Brandon for this presentation. I'll give the microphone back to Kishan.
Thanks, everybody. Everybody, welcome to my first actual webinar with the Asian Chamber of Commerce. And I highly recommend, if you haven't already joined the Asian Chamber of Commerce, to definitely go ahead and do so. Sign up. This is a great organization to be a part of, and I've truly gotten so much value from it. So if we could start, I have my partner, Brandon Kex, who resides in Toronto, Canada, here with me. Brandon's the president of Penzio, and we just partnered. World Insurance, which is the company that I currently work for, partnered with Penzio on this exclusive program. It's pretty amazing considering the world we currently live in, if you will. And we're really adding value to the community, and wanted to kind of share this specific program with you called Penzio Tenant Guarantee. So we're gonna go through this deck. There's definitely gonna be time for Q&A after we're done. So feel free to definitely ask as many questions as you want. And yeah, we could go ahead and start this. Brandon, I would like to introduce Brandon. Brandon's going to introduce the program fairly quickly, and then we'll go through the slides. Brandon, if you want to say a few things as well.
Sure, everybody, and thank you, Kishan, and thanks to the Chamber of Commerce for this opportunity. So I'm the CEO of the Penzio group of companies, and we're a credit risk insurance group focused on developing insurance products for the residential and multifamily real estate markets. I'm calling from Toronto, Canada, where we're headquartered, but we are active and licensed across North America, so Canada, the US. We're also in Central America, and we operate in the Caribbean as well. For the last few years, we've been creating and developing new products for the market, as I mentioned, but with a heavy focus on market statistics and analytics. So we deeply study the numbers behind the key drivers and risks in the real estate market, particularly around rental income and rent properties, whether that's multifamily or condos or hospitality. We try and understand what drives rental rates, and then what also impacts non-payment of rent and eviction and all the different risk factors associated with it. And as we've done a deep dive into these numbers, we've come to some pretty interesting findings and understandings around what underpins the rental market and what are the key drivers. And a lot of it is driven by both affordability and the ability of a tenant to pay the rent. And the reason most tenants are either late on payment or a default on their rent or need to get evicted is not because they're a problem tenant. It's tied to income and job instability. And as our economy has grown, there's been a large middle and lower middle class segment that's kind of been left behind, meaning that more and more income has to go to covering essentials, and that there's less savings per household. And housing has become a larger factor in the percentage of income that goes to covering an essential. So that means that the average American who rents has less than $1,000 of savings in their bank account. So any disruption to their income has a huge impact on their ability to pay their bills and stay in their home. And so what we've tried to do, and the purpose of this call, is to showcase to you a brand new product that protects tenants against rent payments in the event of job loss. Because we know that if someone loses their job or becomes underemployed, that they may have to be forced to miss rent payments, and that's a huge issue, even pre-COVID. And this is a product that we've had under development for almost 2 years, and we were actually ready to launch it a couple months ago, but actually pulled it back when COVID started to happen, and we re-underwrote it, looked at it through a new lens of what's been happening over the last 6 to 8 weeks, and are now relaunching it right now, and we think our timing is great. So as I said, American workers have expressed huge job insecurity concerns. And not only have we seen over the last few years major instability and underemployment in the market, but now because of COVID, we're seeing driving unemployment and major furloughs happening across not only Fortune 500 companies, but all across the economic spectrum.
So thanks, Brandon. I appreciate that. So what we have done is we have worked really hard and created a couple of easy solutions for a lot of these tenants and affordable solutions for a lot of these tenants and landlords. So we have 3 different options. Before, we had only one option that was going on, and it didn't really set well, and it was quite expensive. So as Brandon said, we really revamped this entire program and created 3 different solutions for you guys. So we have a 3-month option where we pay up to 3 months of rent in case of a job loss or disability, or we have another one that's 6 months. So we pay up to 6 months of rent or 12 months. The registration is fairly simple. It's easy to do. It takes about anywhere from 3 to 5 minutes. And the qualifications is you have to be employed. This obviously doesn't work. It negates, the program negates if you're currently, if you have already lost your job. So you have to be employed. That's why we urge you guys to get this product now, because and foresee the future. God forbid something happens down the line, because you know, if we're looking every day at unemployment rates, it's constantly going up on a daily basis. So I think it's at 23% as of today, if I'm not mistaken. Correct me if I'm wrong, Brandon. So as I said, go ahead.
I was going to say, we were sitting at about 20% at the end of last week. We've now seen unemployment rise to 23%. And we're expecting, based on the discussions we've had with some of our major Fortune 500 partners and other large advisory groups, that we'll see an average of about 22.5% projected unemployment nationally, at least over the next 6 months.
So here's the solution. We wanted to really bring the solution to our communities and really help figure out a solution for these guys. So this is how easy it is. It's you just go onto the website and you can pretty much sign up. Here's what we were talking about. So if we're basing the rent on $1,000 a month on your monthly rent. The cost for a 3-month rental guarantee option, it's going to cost $35, and we pay up to $3,000 worth of rent. And the 6-month and the 12-month, it's usually 3.5% of your monthly rent for the 3 months. It's about 7.5% for 6 months, and it's about 9% of your monthly rent for 12 months.
And the reason why this is a positive investment for your business is when you look at, as we said, the unemployment rates that we're seeing right now and where they're trending. It won't take much exposure as a landlord among your tenants in terms of job loss to run into major issues in terms of default scenarios on your portfolio and debt service. And by integrating this program with your tenants, either whether it's buying it on behalf of your tenants or subsidizing the cost, or alternatively just introducing it them for your tenants to buy, it can have a huge impact on the amount of exposure you're going to see over the coming months and years as we head into this recessionary activity. We put up this ROI example to showcase what an average portfolio of 100 units paying $1,000 a month in rent would look like if a landlord purchased the 3-month option for the entire portfolio. So the cost of that 3.5% would be offset by only 2 tenants that lost their job and received the benefit, meaning that you could have over 10-15% exposure, and really you would only need 2% exposure to cover the cost of the program. So it's very cost effective when you look at what you'll be experiencing over the next 6 to 12 months in terms of job loss. And what we've done is designed a program that's really tried to cater to both the landlord and the tenant, meaning that a landlord can use this program to de-risk their portfolio and provide a good news benefit to their tenants, or tenants can purchase this directly by themselves to protect themselves individually. It can be done both ways as a B2B product and a B2C product.
So we brought this, so these are our partners. Penzio is pretty much the developer of the program. It's backed by Lloyd's of London. It's Lloyd's of London, it's a syndicate. It's written through a company called Rentalis. And World Insurance, that's my company. We're a publicly, not publicly traded. We're a privately traded company. We're based on an acquisition basis. We have about a good 700 employees on a national scale, and we're constantly growing. Our tech partner is Get Covered. We have discovered a huge partnership with these guys because these guys are also a insurance shop as well, selling a lot of HO4 policies, which is homeowners policies to tenants. And they have close to about 900,000 policies that they have written. So with their help, they're getting this out to every single one of their clients as well. So these are the 3 partners that we've been working with, and we're really populating and pushing this product out to the masses that way. Again, registration is fairly simple. If you want to check us out on the website, I'll be more than happy to share this link with you, worldinsurance.net /Penzio tenants. We even have a rent guarantee calculator where you could just put in your rent and how much you're paying a month, and we will calculate exactly what you'll be paying as far as your premium is concerned. This is our online portal. It's fairly simple. Again, the biggest qualification is you have to currently be employed in order to get this coverage. It's an annual policy. We charge you month by month. And I want to show you one more slide during the pandemic. Brandon, do you want to touch base on this slide, or should I?
Sure. No, I'll go through it. So it's important to understand that.
I'm sorry, Brandon. This slide is extremely important for everybody on the call to really understand this during this specific period of the pandemic. So this is probably one of the most important slides that all 18 of us that should really pay attention to right now, because this is where the juice is.
Thanks. So we designed this program originally for a pre-pandemic world and then modified it based on what's happening over the past 2 months. And really we've designed it to be focused on what does the economy look like as the country starts to open back up or post-pandemic. Kishan's been mentioning some of the qualification criteria, which is you have to be currently employed when enrolled. You also have to meet a 60-day elimination period, meaning that upon registration, you have to be enrolled in the program for 60 days while employed before you can make your first claim for job loss. So that would mean on day 61, you could make your claim if you lost your job. but there are some restrictions around COVID, mostly tied to the stay in place and the eviction restriction criteria that have been set out. So during the stay in place orders and government action, you still qualify to eliminate the 60 days, but you can't make a claim until 14 days after the end of government action. So we've also designed this so it's not just a countrywide program, it's the rules go down to the state and county level, meaning that, you know, certain counties or certain states will already start to open up their economy and release the government action, which will then allow certain parts of the country to make claims before others. So while stay in place may be in effect in New York, it might not in, say, Florida. So people in Florida can make claims right away. So there's a 60-day elimination period, and then at the end of the government action, there's an additional 14 days. So right now, let's say the 60-day elimination period happened, government action ceases, there's another additional 14 days, and then the first claims can be made.
Yeah, so this is where everybody on the call might have a ton of questions, and we'll be more than happy to cover any questions that you guys may have. That concludes our presentation, and I'll be more than happy to share this deck with everybody on the call as needed. Cindy, I'll send this back to you guys. Thank you so much again.
As we've rolled out the program, we've been introducing it primarily to large property managers and landlords and REITs. And one of the big questions we've been asking is, what did April look like from you from a rent collection standpoint? And what are you looking in terms of your numbers for May, or what are you projecting? And we're seeing that a lot of tenants made best efforts in April to make their rent. Many were late, but did pay on time. But that May is creating a lot of uncertainty in terms of collections. And when we discuss with property managers about what May will look like and what their exposure would be, we're trying to understand what the numbers are, because it's very easy then to quantify the value of this program against that May rental collection exposure. And looking forward from that, as we see what job loss will look like over the next 6 months to 12 months at an average of 20%, we know that the numbers actually for tenants and renters might actually be higher, because there's a direct connection between people who rent and job instability. And that's why we think now the launch of this program is such critical timing and can really help mitigate the issues that a lot of our clients are seeing. If anyone on the call themselves are a property manager or a landlord, what I'd love for you to consider is to go on our website, use the ROI calculator, and do some math to understand what your exposure look like and how this can help you. And if you feel like you don't yet understand the value, I'd love to have a subsequent conversation, and you can reach out to Kishan or myself, and we can talk through some of the mechanics and economics of it. But then we'd also like to see if we could offer the program just directly to your tenants for them to purchase for themselves. That'll way allow for costs to be deferred and you to still receive the benefit. I don't know if we touched on this, but it's important to note that in the event a registered tenant does lose their job and they make a claim, the rent gets paid directly to the landlord. So the tenant themselves don't receive the money. It does get paid direct. So you can feel confident as a landlord knowing that that money is going to be directed to you for its intended benefit and won't get used to pay bills or anything else. It'll be focused as a rent payment as well. The reason we chose the 3, 6, and 12-month options is historically, the average amount of time it takes for a tenant to get their job back is just under 3 months. Now, obviously, COVID is going to affect those trends and stats, what they look like, but we're seeing that the largest interest is for the 3-month option. One, because the average time it takes for a tenant to get back their job, but also it's the most cost effective and allows landlord during that 3-month claim period to work with their tenant to come up with a solution to keep them in their home.
we could conclude this, and if you guys have any further questions, feel free to email us. My email address is Kashan Alexander, and I'll put this on our chat as well. Kashan Alexander, worldins.net. And of course, Cindy and Stephanie, definitely, they know how to reach me. I'm part of the board for the Asian Chamber. So thank you so much, everybody. Really appreciate it.
Actually, I'll mute everyone in case someone still has a question.
I have a question if you guys got a second.
Yeah.
Yes.
I just want to know if the PowerPoint slides that you guys provided today would be available in any capacity.
Yeah, we can share the deck. Absolutely.
Well, they're married.
Yeah, you could share this PowerPoint presentation to anybody you want. I'll send this over to Cindy and Stephanie so she can share it with the team.
He's probably.
Okay, great.
So if you want to get the slides, feel free to text your email here. If you already registered the events, then we have your email. But if you get this login from your friends, feel free to text your email here. Kishan and Brandon, this is Stephanie. So this product is only to multifamily, not like commercial properties.
Right. It's for any type of residential asset that is long-term tenants. It does not work for commercial.
Workforce housing, government housing, the subsidized housing, we work with them as well.
Is that you might have planned for the future and offer some insurance product for the commercial?
We get asked that a lot. Commercial is a very difficult segment to underwrite, especially right now. So it's something we're looking at, but we consider ourselves residential real estate specialists, and those are the numbers we know. So we're really focused on that. Just to be frank, I'm very concerned about the commercial market, and I felt like even if we did design a product right now for it, it would be prohibitively expensive because of the risk. But we're watching it.
So is this already open to everyone? It's already on the market and people can register, right?
Yes, as of 2 weeks ago, we went live with this product. So yes, the website's there. It's worldinsurance.net/Penzio tenants. And yeah, you can register and sign up right away.
It sounds pretty, affordable in current circumstances. It's just,
yeah, I think that's one of the very reasons we price it the way we did. We really feel like it's an affordable product for the masses, especially the workforce housing type clients that we're trying to attract. It really works really well with the workforce housing groups.
We designed the pricing with a long-term view on the market. So we know that there will be some initial exposure, and we're okay with that as an insurer. We're taking a long-term view.
So Min can ask if you have a one-pager you can share.
Yes, Min, I'll email you that one page. I could email everybody the deck. If what I'll do is I'll send everything to Cindy, and Cindy will circulate it to everybody that was on the call.
Thank you. One question, do you also have this one-pager in different languages?
That we don't. That's a great question. We'll be more than happy to provide few certain languages that we could translate.
If you let us know, we can have it translated.
Yep.
That'll be wonderful. I know in Asian community, Chinese, Vietnamese, and Korean, those are the probably 3 main languages people can appreciate. We do have more questions coming in.
Okay.
So Andrew Liang asked, can this program work for projects within qualified opportunity zones?
Yeah, so this can be purchased and utilized as part of a lease-up project or lease-up for new stabilized. So it can be, the cost of this can be rolled into the cost of rent. So really a tenant wouldn't feel the cost, and they can be provided as an optional benefit. It can also be written into the lease alongside HO4 or tenant insurance requirements. The only caveat to that is you can't force someone to buy, every tenant to buy this, because they would have to qualify, meaning that they would have to be employed, but otherwise it can be made that way. And it can work on any type of residential asset, really anywhere nationwide. So opportunity zones, and for any sort of segment or class of residential product.
And Jen shared this link to the slide deck to everyone, so everyone can check the group chat for the link.
Yeah.
Mintan asked, can this cover mortgage payments?
Well, for the landlord, it can, in meaning that they're going to receive the rental income benefit directly to them in cash, and then they can utilize that to pay their mortgage. But it cannot be used. So if you are a person and you live in your own primary residence, you couldn't purchase it for yourself. It has to be purchased for a tenant.
So this is for people who receive W-2, right? If they are like
Yeah, this is her
self-employed,
last job,
this will
probably.
apply. The tenants.
Oh,
What was the last question, Cindy?
Is this for the W-2, right? People who receive W-2 tenants, if they lost their job, then they can buy this type of insurance before, of course, they lost their job.
So the idea is you should be purchasing this now while employed for the event of job loss. So yeah, if you had already lost your job, it wouldn't qualify, but it can be purchased for any type of tenant as long as they have been employed for a minimum of 24 hours a week over the last 6 months.
Are you also talking about self-employed tenants?
Yeah, people who are self-employed, can they buy this insurance
No,
product?
sorry, yes.
Okay.
Yeah, it works for self-employed people as long as they've been had enough contract work or self-employed work that they can basically prove under a claims process. So show contracts that they've worked at least 24 hours a week over the last 6 months. Then yes, self-employed people will qualify. That was actually a new wrinkle we put in. Originally it was an exclusion, and we rewrote them in to make it more consumer friendly.
That's wonderful.
For all the startups in the world. You can definitely take this benefit. Any other? I think Min. Yes, I think we answered pretty much all the questions. Any other questions?
So Jen shared the most updated link. Everyone can go there to check.
Yeah. And I'll share the deck as well. It's also another link. I'll share that with everybody.
Okay, wonderful. If you don't have other questions, I think we can end here. And thank you again, Kishan and Brandon. Thank you for sharing this wonderful insurance product. I think it's just the right timing, and so many people need this new product, and we're happy to share with more people. And we record the session and we will share within our network. Thank you so much, and thank you everyone for joining us today.
Thank you so much,
Thank you,
Cindy.
everyone.
Thank you, everybody, for joining us.
Thank you, everybody. Stay safe, and we'll talk soon.
Okay, bye now.